Do you really think that the stock market has hit a bottom? I mean, it's hit a bottom, but do you think it's the bottom? Do you actually think that we won't crack to another new low? I find it hard to believe. I'll tell you, it's kind of my thoughts on what we need to see in order to actually get a confirmed bottom. But, you know, it's getting pretty crazy out there. That's what we're going to talk about on today's Stock Market Brief. If you're new here, welcome to the show. Make sure to hit that thumbs up button. That is a B. This is a thumb. Let's just go ahead and get into it right now. We're going to start off looking at the 10-year, the 2-year curve, and then the 10-year 3-month curve. First, the 10-year 3-month, we're at now 46 basis points. It continues to head to inversion. You can see here the 3-month yield. It is continue to go parabolic to the upside, whereas the other yields are kind of going sideways right now. The 10 and 2 remains inverted, which is not a great sign, right? This is not good for financials. It's not good for the economy. Now, can a stock market bottom come from this? Yeah, obviously a stock market can come from this, but it doesn't look good overall. And then when you pair this with just volatility in the S&P 500, and by volatility, I mean from the high to the low or the low to the high. Today, we moved around 86 points, which is a pretty big swing given the fact that our expected move for the week is $87. All right, so historical vol, which means it's already happened, and implied volatility is implying that we're going to be seeing a move. You would think that the market would be a little bit more efficient here, especially if we're coming to a bottom, but the market has been highly erratic for the most part, seeing big, wild swings. As far as data that's coming out this week, we don't really have anything big as far as an economic, outlook goes or calendar goes. We have housing starts, building permits, blah, da, 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 da. It's going to be next week where we get that FOMC meeting is going to be the bigger data. Okay. However, still coming this week, we have earnings, right? Today we had Goldman Sachs, Bank of America. Okay. Bank of America missed. Goldman Sachs, I believe, exceeded expectations, which does it really matter if they miss or if they don't miss? I mean, what it looked like on the charts, no, it doesn't really matter, right? So Bank of America missed. It went down in the pre-market, and then all of a sudden it ripped up higher when Goldman Sachs reported earnings, and it was a hit. But when we faded basically mostly throughout the day, all right, and you can see that here on XLF, we were coming up to the upper risk range for the week, and we started closing more towards the low of the day. Why was that, and what took place? Well, if you didn't hear, there was an Apple news drop that came out, and that really put the markets in a tailspin. So the headline reads, Apple to slow hiring and spending for some teams next year. Go figure, right? There is a slowdown taking place, right? And we're tightening into that slowdown. So there's a high likelihood that we can continue to see more stuff like this take place. And like I said, we're going into a big earnings. Now, what happened to Apple? You can see here when the news dropped, bam, pretty much straight down. It was a pretty wild ride to the downside. And what did it take with it? Well, the S&P 500. Apple weight is a huge weight. It's a mega cap. So if Apple goes down, guess what? Everything's going to be selling off for the most part. And you can see here, if we just take a look at Apple, it's nearing its lower expected move for the week, which is just about 145. It looks like it's in touching distance, so we'll see if it can crack that. Tesla is going to be one of the bigger ones reporting this week. We also have, I believe, Netflix is reporting this week too. So those are going to be a couple to watch if we pull up those specific charts. As it stands right now, look at how big the weekly risk range is for Tesla. We're talking down to around 660 to up to around 775. It's been coiling up like crazy. So this news drop that comes out, we'll see the last earnings, I believe it was this right here. It gapped up and then sold off all the way down here. So we'll see what it takes place. But right now, as it stands, a $56 expected move coming from Tesla. That's the earnings expected move, which will hone in when it gets closer to. Overall, though, we're still in bearish context. So this does not look good. If we start heading down with Tesla being a big mega cap stock, that's also going to put weight on the S&P 500, which lends hand to, hey, is this bottom actually really in? What do we need to see to actually see a bottom come in? If you take a look at Netflix, look at this, $31 expected move for Netflix. I mean, we're talking down here to up here as far as what the weekly expected move is, and this is what the expected move is as far as the earnings go. So we'll see here if we get a plus or minus $30 move, which is, you can see it on the chart. It is a gigantic move. So imagine coming down all the way down here on earnings, what that could do to the potential marketplace. Even if it comes up way up here on earnings, maybe it really depends on how the market interprets it. Okay, there can be a miss as we've already seen, but the market still rallies. Okay, but we're talking large amounts of volatility coming this week and then next week with the FOMC meeting. So you got to be on guard. If you take a look at the S&P 500, we finished down on the day, almost down 1%, and this is really driven because of that Apple news drop. But you can see here we are still coiling up, right? We saw this expansion move. Now we're just contracting, getting tighter and tighter, but we're still seeing wild swings. So a break from this zone that's taking place can get downright wicked, obviously. And if you just look at the 15-minute time frame, we closed right on that 5-day moving average, and we've just been going sideways here since, I guess, last month over here. All right, just been going sideways, but it's been wild chop back and forth. So when we start breaking through this range, I would expect to see a lot more volatility, either to the upside or to the downside, depending on which way we break. All right. Now, if we continue on, I want to point out a couple things about volatility. Volatility is still relatively high. It's closed today at 25.30. So be aware of that. I'll show the other index products when we get to them, but Russell Vol and NASVOL is also still in the 30s. If we take a look at the Qs, very same situation. It's forming somewhat of a bear flag pattern, right, in bearish context. It's right around that 50-day moving average. It's right around prior resistance, but overall you can see price action is tightening up. Price action is tightening up. So when it breaks from this, we may see an expanded type move where we saw something very similar. It wound up, all that open interest built, and then when we broke, it was fast and furious to the downside. And this could go still either way at this particular point in time. Just be aware that we got to get through this week and we got to get through next week, which is the FOMC, which it seems to me that it's not going to be a 100 basis point hike. They're now pricing in, pretty much baking it in, that it's 75 basis point hike. So if we go look at the Qs on the 15-minute time frame now, you can see we close right by that 5-day moving average. RSI is getting a little overbought here, or oversold, sorry. So yeah, we can continue to see bounces. We might get some more of a downdraft. There is no really good trades right now set up because of, one, the volatility, and then the chop back and forth. So you need to play, you short at the top end, you buy at the low end if you're being tactical at this particular point in time. But we're basically in the middle of a range with a neutral to slightly positive 5-day moving average. So just don't get chopped up in this mayhem. And if you apply also, if you look at the NASDAQ volatility, we're in the 30s, right? We closed at 31.58, so that is high. Volatility is high. This is where you can really get hit. Okay, even good, stocks that are all set up, there can be a lot of fake breakouts given the volatility remains at this level. And if you look at the IWM, same situation, right? Big contracting pattern, right? Boom, 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 boom. It's contracting, it's getting tight. Be ready for a potential break, right? The 167.50 is the low end. 177.50 is at the higher end as it stands right now. Okay, we will see if that does break. If you look at the 15-minute time frame, what do you know? We close right by that 5-day moving average. It's like a magnet right now. And the RSI got to that oversold territory. Maybe we see a little bit of a bounce. Should we get too excited about that? No. If you just look at the chart, we're not getting any confirmed break. So how do you play this? Well, you short from the high end, you cover on the low end, or you buy at the low end, and then you sell at the high end. And if it breaks down, well, you're at least getting a good risk to reward trade going on there. If it does start breaking down, because you got to be prepared for a potential move outside of this. As I've already previously stated, open interest has just been building, which can cause some sort of a squeeze. And by squeeze, I mean either to the upside or the downside. We just got to wait for that break. But if you take a look at RVX, which is Russell volatility, we're in this compression pattern too as well. It's just contracting. We're at the lower range, and we're still above 30 for Russell volatility. So implied volatility across the board remains elevated. Historical volatility remains still elevated at these particular point in time. So what do we need to see in order for potentially actually a market bottom? And I personally think that in order to see really a market bottom, we're going to have to see the dollar back off. The dollar has to fall. And the dollar as it stands has had a very strong negative correlation to multiple assets that are quite important, such as various commodities in the S&P 500. And as it stands right now, I don't have the chart of the dollar up, but the dollar, it pulled back a little bit, but it's overall in a bullish trend. Okay, so the dollar is still in a bullish trend. at this given time. So I saw David Hunter post today saying that looks like it's turning over. I'm like, I don't know what he's looking at, because to me this looks like just a pullback in an overall uptrend. So we'll see here what takes place. But you can see the correlation on the 90 days, 120 and 180. We're talking high 80s to low 90s as far as the negative correlation goes. So for a while here, the dollar has been rising, and that's been putting pressure on the S&P 500. So if the dollar continues to rise, that can still very well hang in, and we'll probably see the market continue to perpetuate lower until something maybe breaks and the Fed pivots and the dollar falls from the sky. And then maybe at that point, then we can say, okay, this looks like it can be a more severe bottom building or taking place. If we continue on, you can see the same thing here, because the next question is, okay, so if the dollar breaks down and starts selling off, what would be a better investment? And this is where it can get very complicated. One, you can look at individual stocks, you can look at the S&P 500, but also be very aware that gold has a stronger negative correlation pretty much on the shorter time frame, and now it's even creeping into the longer time frames too. So if the dollar starts really breaking down, it could very well benefit gold. And now gold has just been getting completely destroyed. It's a bearish trade, bearish trend, pretty much bearish across the board. So we'll probably get some sort of oversold bounce, but it's just not looking healthy at this given time, given the back of a strong dollar. So be aware of that strong dollar. If the dollar continues to move up, it's going to continue to apply pressure to these various assets. If we look at Bitcoin, Bitcoin did get a buy signal on the Saylor to Schiff tool, right? We crossed up through it, and then we started a new weekly candle, and we crossed right through it. I'm not really too convinced that this is going to hold up, but hey, that's the buy signal. So we'll see here if it can get some more momentum to the upside. That's for chart of Bitcoin. Ethereum loved it. Ethereum popped off and just started ripping, and we said kind of like, okay, start looking at that 1750 level. That's where the prior resistance is at, or prior support. So if we come up into that range, it could act as a level of potential resistance. Do you look at Bitcoin on the daily time frame? We're still within this compression pattern in bearish context. So I don't have too much hope for it, to be quite honest, but we got a buy signal. We haven't seen one for a while. What's really liking here is crypto-related equities. So something like MARA, that was up like 20+% today. RIOT, Riot, that was up 15 or something % today. So those played out really well. So if you haven't got into any crypto trades, like don't go chasing, like hopping into and FOMOing in, especially on something that just moved 20%. Can it go higher? Yeah, it can, but also timing is incredibly important, especially in this type of an environment. But the reason why I'm bringing this up is if we start getting a sell signal, guess what's also going to be great plays? It's going to be shorting crypto equities. And some of those have already made big runs, so they could be good fade trades. But if this starts turning back down, the last time it turned back down, MSTR fell 70% on this turn down. So we'll see here if we get a sell signal in the future, and that gives us some insight into potentially taking advantage of that on shorting some crypto equities. We went over a lot today. Hope today's episode helped out everybody. That's all I got for you. See you later.